Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, John Howell here. It's early Sunday morning here for me here in Sydney, Australia. And I'm just recapping what I do and what I do most weeks, guys. Just so you know, on the weekend I recap my trades for the last week, and especially for over the year. And I have a spreadsheet and I take all my trades, and then I look where can I improve on. No, it's never really improving on entries. It's mainly improving on management, and where did I go wrong, and so on and so forth. Because that keeps me accountable for what I do. And I have with my private clients, I have a process called record, review, and improve, which means I record every trade because I actually want to get better, and then I review, right? So I'm seeing the facts for what it is. Okay, what am I actually doing that's causing me to go backwards or to stop or whatever, and then keep going, right? And then move forward, or there may be times when you're doing really well, and you'll be able to see, okay, when is, I'm doing really well right now. Why? Because I'm jumping in. I'm not trying to pick and choose, and so on and so forth. Anyway, so that's what I normally do on the weekend, guys, for me. But then also spend some time just looking at where are we right now in the overall markets itself. What's really going on? So I do a bit of reading up and so on and so forth. What I'm doing right now is reading up and just get a bit of a pulse on what's happening. But that does not affect the way that I trade the markets, right? Because, most people don't realize that I have been, most people don't realize, right? But all my trades that I've been on, apart from one, have actually all been bullish. But they're short-term plays as well too, okay? So, I was reading up on this Nasdaq. I was reading on this zero hedge article here, and the thing that I was looking at here it's really interesting, right? Because I'm seeing what you see here, right? Record Stampede in the stocks. Nasdaq volume hits all-time highs, and you can see here basically if you bring up this screenshot here, right? Look at this Nasdaq chart, absolutely just going through the roof, right? Absolutely just spiking through. People, I've also heard and seen that there's a record number of people are actually opening up trading accounts now to get in the markets. Now, in Ray Dalio's book, when he talks about basically where we are getting through the top of the market, right? You see, I think one of the actual principles, and so basically you're seeing I forget exactly what principle it was. All right, so there we go. I've just brought out the actual book itself, and it's basically the framework of past bubbles. And number one is, are prices high relative to traditional measures? Number two is, are prices discounting future rapid price appreciation? Number three, are purchases being financed by high leverage? And I'll get to that in just a minute. Three, are buyers and companies making forward purchases? Five, have new participants enter the markets, and you'll see this in here. Six, is there a broad bullish sentiment? And seven, does tightening risk popping the bubble? And we actually already saw that. The number seven, right? The tightening actually did start to prick the bubble, no matter what we sort of think, right? It's interesting that number seven, does tightening risk pop the bubble? You'll be able to see that. That actually happened last year, I think it was, when they actually started to drop the rates. It was interesting that they no longer could ever rise and back up again. So, but the number 1 through to 6, number one, are prices highly relative to traditional measures. And it seems like the overall stock market is back to high. There's a lot of really successful investors that are very weary about this market right now. But the big one here, right, is are buyers and companies making forward purchases? But not that one, sorry. Number five. Number five is, have new participants enter the markets? And six, is there a broad bullish sentiment right now? And as you know, right, everyone gets in at the top of the markets. So it's really interesting to see that even though right now the overall markets are just absolutely just crazy, right? And it's really interesting, isn't it? Because as the stock market was falling, I think I was the only one of the YouTube videos out there, right, in Drew and March saying, listen guys, this thing's gonna bounce. Now we've got that bounce. What's next, right? What's next for long term? Not tomorrow, okay, but the overall big picture. And right now we're seeing record number of people getting involved with these markets. So firstly, as you can see, right, record number of trading accounts have been opening up, record number of people in the markets, right, because they think this is just it, right? Especially when they start to look at all the tech stocks out there. Like this is the tech stocks, Facebook, Amazon, you know, Netflix, and so on and so forth, right? They're pretty much at all-time new highs, around about that anyway. And so a lot of people are really, really, really bullish right now. And a lot of people opening up trading accounts. So that's the first one there, right? Is like a lot of people actually start to get into this market. So is that a sign that we're forming an overall top here? Now, it doesn't mean we can't go up for another week, but an overall top here. And the next thing here is not only that, but as you can see here, right, that the CBO call ratio has actually spiked, and the highest time we can see here was actually back in 2010. Now, you know what actually happened in 2011, right? We had a very sharp pullback, right? So most people, not only is there a record number of people opening up trading accounts right now and getting involved with the markets right now, record number, right? When most people are greedy, be fearful. And when most people are fearful, be greedy, right? When was the right time to be greedy in the markets? You guys, if you've been watching me for the last few months, you know, right? I was very greedy when most people are fearful. Now I'm not too quite sure long term, that is, right? Short term, I have my system. I get in, hold for a few days, maybe for a few weeks, and I'm good with that. But the overall big picture of this right now, where we are right now, and a big sentiment is not only is there a record number of people entering the markets, but now we have a record number of people actually being really, really, really bullish for that. And not only that, but you can see now when it comes to people hedging their portfolio, as you can see here, right? Finally, since this is Jay's market after all, as you can see here, right, that there's no point in hedging, and sure enough, the put to call ratio tumbled to just shy of all-time lows, etc., etc., right? So look at this here. Look at the put to call ratio. That means people are taking out people are basically removing put options from their vocabulary right now. and as you can see with the call ratio, right, calls at all-time new highs, puts that. So as you start to build a big picture here, right, and on top of all this, guys, do you guys really believe that number that came out with that really good number that we got late last week? Record breaking number. We went from a devastation number with jobs, and then suddenly we have a record breaking month. Hang on a minute, that doesn't make sense to me. No. There's something wrong, right? There's someone cooked the books with that one. I'll tell you right now, because half the America is still pretty much in lockdown and slowly opening up. That doesn't make sense. Anyway, something really, really fishy about that. So when you start to build this picture here, right? So for long-term investors, I'd be very, very, very nervous right now for long-term investors. I could be wrong, so don't be doing anything based on what I'm doing right now, what I'm saying here right now, guys. But where we are right now in the sentiment of things, that number that came out recently, I don't buy that number. I don't buy that number at all. How can we go through a complete lockdown and we're still slowly opening up? We're not even fully open up yet. To then have a record break, and it just doesn't make sense to me. And then suddenly suddenly we're seeing a lot of people actually entering the markets, right? People are just thinking, oh, this thing is going to keep going up, so on and so forth, right? When people are greedy, be fearful. When people are fearful, be greedy. Once again, a lot of people really, it's so interesting, right? As the stock market was falling, so many people are fearful. You guys know, right? I started to load up on SPY, Apple, and JP Morgan. SPY, a nice profit for me. Apple made me an enormous profit for me, like 230-40% return. And I had a small loss on JP Morgan. So I was very, 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 very greedy when most people were fearful when the stock market was crashing. Now I'm not in any longer term positions. I just have my trading system where I'm in and out generally within a few days, and I make some good cash flow from there. But longer term, I'm very, very sort of like, I don't know when it comes to the individual stocks, right? There are sectors like silver, gold, and maybe some mining stocks, so on and so forth, that could be good for long term. But right now, looking at this thing here, the actual stock market itself, I think some of the mining stocks and some of silver and gold and stuff like that, I think they're going to be pretty good long term, especially silver and some of the actual mining stocks itself. But right now, when it comes to the actual stock market, Nasdaq record value time, especially with them seeing them actually, oh my goodness, I can't believe Netflix and Amazon, and especially if you look at most stocks, right? Most stocks are just on a pretty good vertical move to the upside. And if you've been watching me for a while, or if you haven't, if this is the first time you've been seeing me, then if a market, even if the market has a big crash like it did right now, and then we have a big rally right now, we need to see some sort of breather, right? So we're probably likely to see some sort of a pullback anyway. Look at the mining, look at GDX right now, right? You guys know, right? For the last few weeks or more, I've been saying, guys, don't be jumping in now, wait for a nice pullback. And long and behold, we're having a 15-20% pullback right now in GDX, because that's just the way the markets work. And if it is going to continue, it's going to continue from here. So it's going to be really interesting to see what happens with the actual Nasdaq itself as well too. And once again, so record-breaking number of trading accounts being opened up and being into this here. I just went through, I just clicked on the wrong thing there. Where did I go through there? Let me go back to here. All right, there we go. And as you can see, right, so many people now are doing call options. It's once again, guys, you've got to do the opposite to what most people are doing, right? It's like when most people are fearful when we had the shutdown, that was the time to buy, right? What's happening right now? And then also last but not least, so many people are not even thinking about put options right now because the call options are so through the roof. So, we're getting, as I said before, record-breaking, stampede into stocks, as the Nasdaq hits all-time new highs and so on and so forth. So I don't know about this, guys. Something really, it feels fishy to me, right? We have a dodgy number that came out, which I call big capital B and a big capital S on that thing. And then now we're starting to see, the whole thing here, right, guys? It's like, again, when Donald Trump and when the World Health Organization came out and said pandemic, and Donald Trump shut the economy down, guess what? That was the time to buy, right? Now everything seems to be getting good. You should be putting, especially if you're an investor right now, you should be putting I don't know, maybe I should start to put some stops in place. Or if I do have stocks, maybe I should just start to buy some put options for the next 6 months or so to protect that. So if the market does crash, 15, 20% or whatever, that I'm protected. In fact, that's actually what I recommend a lot of people do. If you're holding a lot of stock right now and you're worried about that, just sell a portion of your stock, maybe 5% of your portfolio. Go buy some put options on that to protect your portfolio. And the worst case scenario is that you don't actually, the market doesn't do much and you lose that 5%, but that losing that 5% or 3 or 4%, whatever it's going to be worked out to be, is so much better than if this market does start to come off again even harder, and before your whole portfolio is down 30% or so. So anyway, guys, leave a comment below. Let me know what you think, what you're thinking here. What do you think about the number that came out? And what are you seeing through here as well too? For me, guys, for me long term, I'm not in anything long term right now. I was when the market crashed, but right now I am out. What I mean by I'm out, I'm nothing to do with the stock market. Silver, gold, mining stocks, I've got some positions long term there. But when it comes to individual stocks in the stock market right now, I am not. I'm definitely not. What's the word for it? Yeah. Once again, guys, this just doesn't seem right to me, and it smells really, really, really fishy. And if you're a smart investor, you'll start to see these warning signs before they happen. And once again, guys, it takes time for the top to form, right? 2007, it took the entire 2007 for the top to form. And then it was 2008 into 2009 where we actually had the bear market and so on and so forth. The question I got to ask you guys is that, are we actually forming that one massive top right now overall? And is 2020 and 2022 going to be that bear market? Especially what we're seeing right now.